Hey guys, it's Ms. Morgan, and we're going to talk about closing entries today. Closing entries are made after the financial statements are created. If you haven't already printed off the worksheet that I provided, go ahead and pause this video and either download or print the worksheet so that you can work through the journal entries with me. You'll see here that permanent accounts are your balance sheet accounts. These are your assets, liabilities, and your capital account. Temporary accounts, these are the ones that we are going to close, are your income statement accounts and drawing. So that would include revenues, expenses, and drawing. We are going to use a new account called Income Summary, which is also known as the clearing account, for these closing entries. Closing entry number 1, we're going to close revenues into Income Summary. So since revenues have a normal credit balance, to close them, we will debit revenue and credit Income Summary for the balance in those revenue accounts. If you have more than one revenue, you'll have more than one debit. Journal entry number 2, you're going to close expenses into the Income Summary account. Since expenses have a normal debit balance, to close those out, you'll have to credit every expense account. So the journal entry here will be a debit to Income Summary for the amount of total expenses, and then you will credit each expense for its balance. After journal entry number 2, the balance in the Income Summary account will equal net income. Why? Because we've closed out revenue and we've closed out expenses into that same account on two different sides of the account, as you see. And so the difference between that is net income. Journal entry number 3, we're going to close Income Summary into capital. So once you know the balance of your Income Summary account, and here since we had a net income, it was a credit balance. To close it, you'll debit Income Summary and credit capital. If there was a net loss, this entry would be reversed. Entry number 4 is to close drawing into capital. Since drawing has a debit balance, to close drawing, you'll need to credit drawing, which means you debit capital. And as you know, when you withdraw money from your business, it decreases capital, and that's why you debit capital. So after the closing entries, we would create the post-closing trial balance. That post-closing trial balance will only include balance sheet accounts.